Hey everyone, welcome back to the channel. In this video, we're going to talk about what Warren Buffett and Berkshire Hathaway bought in the third quarter. The third quarter just ended last month, and I think taking a look at what he does each quarter gives us a great insight into how Warren Buffett sees the stock market right now, where the opportunities are, and where he puts his own money gives us a pretty good sense of what he thinks is undervalued. So what we're going to do is take a look at the kind of stocks that they bought in the third quarter and what insights we can get from that. So be sure to watch through the entire video to get the full picture of what Warren Buffett sees in the stock market right now. So headline of this article, Warren Buffett spent billions on stocks in quarter three. If we take a look at specifically what he bought, first thing, he spent $2 billion more increasing the Bank of America position. And so this is more of the same that we saw in the second quarter, where Warren Buffett sold out of some of the other banks he owned like Wells Fargo, and he pretty much just consolidated his banking holdings into just Bank of America. So Berkshire Hathaway now owns 12% of the entire bank. That's telling they had to get permission from the Fed to be able to do that. And so Bank of America is now Berkshire Hathaway's second largest investment in their stock portfolio. That's behind Apple. So Apple is the largest holding. Second now is Bank of America. The second thing they bought was the Snowflake IPO. I made a video talking about the Snowflake IPO and if you should invest in them. And in that video, I talked about how even though Berkshire Hathaway bought in, they were able to buy in before the IPO happened. And because of that, they were able to get in at a much lower price than when the stock opened for trading and instantly doubled. So that's why the value of this investment has roughly doubled since the stock jumped up over 100% on their IPO day. And so that's why a large company like Berkshire has the advantage over the retail investor in IPOs like that, since they're usually able to get in at below the price that the stock actually begins trading at. Another thing they bought was Berkshire Hathaway took an interest in the 5 Japanese trading companies. And this was an interesting move considering I think it's the first time that he's invested in Japan. I think this one's very interesting. If you combine this with the fact that Berkshire Hathaway bought into a gold mining company, Barrick Gold, I think this is sort of giving you the picture that Warren Buffett wants to diversify outside of the US. Where if you take a look at the Warren Buffett indicator, which he says is the most important metric to seeing how overvalued the stock market is, right, the market cap to GDP, you can see that that's at all-time highs right now. And so because of that, Warren Buffett probably isn't interested in investing in the US stock market, considering how overvalued it is. Instead, he wants to invest in other economies like Japan and buy some things like gold stocks. However, that isn't the biggest purchase of quarter three. The biggest thing that Warren Buffett did in quarter three was buy back his own stock from Berkshire Hathaway. We can take a look at this article from Bloomberg. Berkshire Hathaway spent the third quarter buying back $9 billion of its own stock, more than it has repurchased in any year in history. So in total, 2020, Berkshire Hathaway spent $16 billion in stock buybacks, which is just an insane amount to think about. And this is the most cash Berkshire Hathaway has ever spent in 1 year. And even just looking at the third quarter, just the third quarter alone, the $9 billion in buybacks is more than it has repurchased in any full year in its history. So that's sending you a message, and that's telling you something. What that is, we'll get to later in this video, but it's very clear that Berkshire Hathaway and Warren Buffett wants to put a lot of cash into their own stock right now. So we can take a look at this chart showing the share buyback since 2018. Again, ramped up like crazy this year, the largest amount ever in a year for the company. Even in quarter four of last year, quarter one of this year, before the entire shutdown, the buybacks were starting to ramp up. So this chipped away at the cash position a little bit. I think earlier this year, the cash position was over 160 billion. Right now, it's 145 billion. So it has dropped a little bit, but still a ton of cash that Berkshire Hathaway is holding to be able to deploy into more investments in the future. Now again, if we take a look at why they bought back stock, Warren Buffett is very clear for the reasons he buys back stock. So this is from their 2019 annual report, and they have a section specifically talking about share buyback. And so in this section, they say Berkshire will buy back stock only if Charlie Munger and him think that the stock is selling for less than it's worth, and secondly, the company after the repurchases still has enough cash. And so that's definitely the case for the second factor. 145 billion, definitely enough cash on the balance sheet. And so really the question is, does Warren Buffett think that his own stock, Berkshire Hathaway, is undervalued? If he does, that's when he'll start loading up on the buyback. And I think specifically what he said in the past is that if Berkshire Hathaway is trading at 1.2 times book value or less, that's when he considers it undervalued. and that's when he will start buying back stock aggressively. And I think it hit just about that level earlier this year. And so as we've seen, a huge purchase of stock buyback. When this is happening, when we're seeing a record amount of share repurchases, that tells you that Warren Buffett, one of the greatest investors in the world, thinks that his own company is extremely undervalued. And I think they're sending a very strong message just from the amount of buybacks they're doing, that they really don't see a better opportunity in the market for Berkshire Hathaway compared to just buying back its own stock. Now, as we'll see, the share repurchases did have a positive impact on the stock price, where Berkshire stock climbed 20% in the third quarter compared to just 8.5% for the S&P 500. And so we take a look at specifically what happened in the third quarter, started in June and ended up September. So if we go from that point, we can see that we can see that over 18% increase in the third quarter. And again, the main result of this was from the buybacks. And so this was a monster quarter for Berkshire Hathaway stock. Again, 18%, that's more than you're usually going to get in a year holding this company. So just to get that in one quarter shows how share repurchases can help the stock price. And again, this is showing you that at the end of the quarter was around 327,000. At the beginning of the quarter was around 275,000. And this is for the Class A shares. So, Warren Buffett's telling you around, and take an average, around 300,000 for the stock is a fair price to be paying for Berkshire Hathaway. I think that's 300 for the Class B shares. So I think when one of the best investors in the world is buying a company that he knows better than anyone else because it is his own company, you can be sure that he's pretty confident that the stock price will be a lot higher in the future than it is right now. Now, that being said, Berkshire Hathaway is undervalued, and I'm someone that likes to buy undervalued stocks. So am I buying Berkshire Hathaway right now? And the answer is no, I'm not. And that is for a couple of reasons. The first thing is that Berkshire Hathaway probably is slightly undervalued, but they're not at the level of valuation that I would need to invest in a new company right now. Where Berkshire Hathaway is trading at, probably now it's probably 1.3, 1.4 times book value. And so again, that's around fair value for the company, which is not something you can say for most of the other stocks out there right now, which are insanely overvalued. Berkshire Hathaway, I will say, is fairly valued for the underlying company. Now, the problem is I see a lot of risks in the stock market right now, just based on where the economy is, what the level of valuation is, risks going forward. And because of that, I'm holding a lot of cash in my portfolio, and I'm only willing to invest that cash if I think I can generate superior returns to the index average, 8%, 9%, 10%. I want to beat that by a larger amount per year. And unless I have that margin of safety where I'm expecting insanely high returns, I'm probably not going to invest in a stock right now. I'll probably just wait it out until we see lower valuations at some point in the future. And so because of that, even though Berkshire Hathaway I think is a solid buy right now, if you buy and hold, you're probably going to get the normal 8, 9, 10% a year going forward. That's not the type of returns that I'm looking for, especially in this type of market environment where with the risk you're taking on by investing. And so because of that, at these prices, I would not buy Berkshire Hathaway. Instead, I'm only saving my cash for companies that I think could make a huge return in the next few years, like for me, Cumulus Media, which I think can go up 4 to 5 times in the next 2 or 3 years. Bank OZK, which I think will more than double in the next 5 years. Companies like that, where I think the level of valuation is so low that the stocks really have nowhere to go but up. And so that's why I wouldn't buy Berkshire Hathaway at these prices. Now, if we did see the stock fall off a cliff, then I would revisit this, obviously. But at these prices, I think there's better opportunities out there. Now, the second problem with investing in Berkshire Hathaway right now, and this is something that a lot of investors in the company have been pressuring Warren Buffett to do, is that they want to see them use the cash that's on the balance sheet, right? They have $140 billion in cash that's just sitting there, and the longer it sits there, the worse it is for investors, because investors are expecting the company to do something with that cash to be able to grow it over time. And so they don't like to see a huge pile of cash just sitting there for years on end. But the problem is Warren Buffett buys stocks when they're undervalued, and right now the stock market is at an all-time high valuation. So because of that, Warren Buffett's not going to be buying into companies with that cash right now. Instead, he's going to wait until there's a lower valuation in the future, regardless if that's 1 year from now or 5 years from now. And so because of that, I don't expect Berkshire Hathaway right now to be able to do anything with that cash to grow it at a meaningful rate. That's another reason why I would be hesitant to buy this company now. And I don't think that cash is going to be used for anything unless we see a huge drop in the stock market, even worse than what we saw in March. Because remember, in the March stock market crash, Berkshire Hathaway wasn't really buying much either. So it would have to be worse than that for Warren Buffett to start deploying that cash. And so while I think there is a chance of that situation happening in the future, if that did happen, I'd revisit this company because then they'd be able to use that cash in a manner that would help investors and shareholders. So as of right now, I'm just personally waiting it out for this company. Now, the second problem is that just the level of cash that Berkshire Hathaway has, their investing universe is now so much smaller than it was in the past for the company. So here's a list of the 50 largest American companies in terms of market cap. And remember, Berkshire Hathaway is holding around 150 billion in cash. So if you take a look at, the 50 largest companies, we have some massive companies on here. And if we go down to, the bottom of this list, we can take a look. A lot of these largest companies are trading under that 150 billion market cap. So we can take a look at a stock like McDonald's, which is 161 billion. That's how much cash Berkshire Hathaway had at the beginning of this year. So to think that Berkshire could just completely buy out McDonald's with cash is just insane to think about. That's how much cash they're really holding on the balance sheet. And the problem with them now is they're holding so much cash that even though, yeah, they can do a lot of smaller deals, to be able to move the needle for the company, they're going to have to put a large percentage of that money to work. Warren Buffett's been saying he's looking for that elephant to invest in, that massive deal that he's been waiting for, 10 plus years to be able to invest in. And so because of that, this is really the investing universe for Berkshire Hathaway right now. It's these 50 companies really, which are, the most likely that he'll invest in at some point because they're large enough that significant buying in from Berkshire Hathaway won't just send the stock price going straight up. So again, because of that, until we see a number of these companies fall a significant amount, I'm not expecting them to invest that cash anytime soon. And again, until that happens, I'm not super interested in investing in Berkshire Hathaway. So that's it for this video. Let me know if you're someone that owns Berkshire Hathaway stock down in the comments. And if you're not, talk about some of the reasons why you don't own them. So that's it for this video, going over Berkshire Hathaway and Warren Buffett's third quarter buys. If you found value out of this video, hit the like button to help out the channel. If this is your first time here, subscribe to see more videos like this. So that's it for now, and I'll see you next time.